The last couple of years has felt like every market conversation eventually turned into a conversation about technology stocks. AI, chips, the Mag 7, which company has the best model, which company has the strongest cloud platform, and which company is spending the most money to win the AI race. And to be fair, technology has been a huge part of the story. However, the first half of 2026 was more interesting than just tech stocks went up again. The S&P 500 finished the first half up roughly 10%, but underneath the surface, the market started to broaden. The equal weight version of the S&P 500, where every company gets the same weight instead of letting the biggest companies dominate the index, was up more than 12% for the first half of the year. Small cap stocks measured by the Russell 2000 were up around 21%. That matters because when people say the market is broadening, they mean more parts of the market are participating. It is not just a handful of giant technology companies carrying the entire index. You start seeing strength show up in more sectors, more industries, and more types of companies. And AI is a good example of why that can happen. At first, the AI story was pretty obvious. Investors focused on the companies building the models, the chips, the cloud platforms, and the software. Those were the front door AI names. But as the AI boom has matured, the market has started asking a different question. Not just who makes the best AI, but who builds what the world's AI needs. Because AI may be digital, but the build out is very physical. Every AI request has to be processed somewhere. That means data centers. And these are not tiny server closets in the back of an office building. These are massive facilities that require electricity, cooling systems, land, fiber, transformers, transmission lines, concrete, steel, copper, and a grid that can support all of it and more. That changes the investment conversation. Suddenly, AI is not just about software engineers and chip designs. It is also about utilities, industrial companies, electrical equipment, construction, energy infrastructure, and raw materials. The app is the part we see. The infrastructure is the part the market is trying to price. Data center demand is growing so quickly that it is starting to show up in power forecasts. The International Energy Agency has projected that global electricity consumption from data centers could double by 2030. Goldman Sachs research has projected that data centers could represent a much larger share of U.S. peak summer power demand over just the next couple of years. That is not a small operational detail. That is a major infrastructure challenge. Before AI can change the world, somebody has to build the world AI needs. Somebody has to find the land and get permits approved, build the data center, generate the electricity, install the transformers, run the fiber, and yes, somebody still has to pour the concrete. That is why the AI story is becoming a construction story. But there is another side of this too, because communities are starting to push back. Everybody likes the idea of AI in theory, faster tools, better technology, more information. It's all very exciting. But when a massive data center gets proposed near an actual neighborhood or a zoo, the conversation changes quickly. People start asking practical questions like how much electricity is this going to use? How much water will it need? Are we giving tax breaks to a project that may not create long-term local jobs? Those are not crazy questions. A recent Gallup poll found that 7 in 10 Americans oppose having an AI data center built in their local area. That does not mean the development stops, but it does mean the infrastructure build out may not be as simple as a tech company wants a data center and it just appears. There are real world constraints, power, water, land, permitting, and markets pay attention to constraints. That is part of why the first half of 2026 is such an interesting market story. Yes, AI is still a major theme. Yes, technology still matters, but the opportunity set has started to look wider than was obvious tech names. If AI requires enormous infrastructure, then the economic impact can ripple into areas of the market that do not look especially futuristic. Utilities, electrical companies, construction, these things don't sound like science fiction. But if the future requires massive amounts of computing power, then all of those boring sounding pieces become part of the story. That is the investing lesson. Big trends rarely benefit only the companies in the headline. The first order AI question is who has the best technology? The second order question is who's going to build the facilities that technology needs? That does not mean you should run out and buy utilities or copper. By the time a story becomes popular, a lot of optimism may already be reflected in the price. But it does explain why diversification matters. If you only choose the obvious headline, you may miss the broader economic impact. Markets are complicated. Big trends ripple outwards. So when you hear someone say the market is broadening, that is what they mean. More than one group is participating, and leadership is starting to spread across different parts of the market. And in 2026, part of that broadening story is that AI is no longer just a software story. It is also a power story, grid story, data center story, and even a community story. Increasingly, it is a construction story. That's it for this week. This is Jeannie, the 401k lady.